our latest video session offered through the Vancouver Island Economic Alliance. And a happy sunny Tuesday to everybody. I hope you'll get a chance to enjoy this beautiful weather that we have promised this week. I have a few notes to share. So due to some of the Zoom technology here, you're going to see my picture rather than my actual live face here for just a moment, and then we'll go to our speaker. So I want to thank you very much for joining us here today. I first want to acknowledge the traditional lands of the Kwakiutl, Nuu-Chah-Nulth, and Coast Salish peoples on whose traditional lands we live and work. My name is Dan Hurley, and I'm a director and chair-elect of VIEA. I'm also principal of the Hurley Martin Group. We are a partnership that focuses on public engagement, government relations, and philanthropy, consulting, and training. And I'm pleased to be your host and moderator today. And today I'm speaking to you from Gabriela Island on the traditional territories of the Snuneymuxw people. I also want to thank our sponsor for today's session, TD Bank. And we also appreciate everyone for joining us today. So this is the latest in our video series that we have started since the pandemic period began. And I hope you will agree that this has been a helpful and informative session, certainly for myself and for those who participated. And really, as VIEA, our objective here is to unite and connect decision makers and to help inform and add to the conversation on economic vitality. And that couldn't be more important than it is today. And our goal in doing these sessions is to provide you information in an easily understood format to help your business, your organization, and your community to get through this period and help to thrive and grow in the period that follows. We'll continue to plan these sessions over the coming days and weeks, and we welcome your ideas and suggestions on topics that we can deal with in future sessions. So before we begin, just a couple of notes about this session over the Zoom platform, and many of us are getting used to using this for our meetings. We're going to have a 10-minute presentation by our speaker, and then we're going to open it up to questions and answers. Rather than having everyone speak all at the same time, we ask you to put your questions into the chat function in your Zoom platform. For many of you, you'll find that at the bottom of your screen. It might have a little orange or yellow color to it when it's active with chat comments. So please put your questions in there. I will do my best to get to as many of those questions as we can. We are limited on time. But we will also try to curate those questions afterwards and be able to give you some of those answers. If we don't get to your question, which is possible, we ask you to direct those questions to our president, George Hansen, who's here on the call, and his email is george@viea.ca. So hopefully we'll get to as many of them as we can. So at this time, I'd like to welcome our speaker, Katie Bishop. She is the District Vice President, Commercial Banking for TD Bank. She's also a VIEA board member, and Katie will be speaking about how to approach loan and mortgage payments with your lender. So I'm going to just reappear on the screen. Here I am, and I'm now going to pass it over to Katie for 10 minutes. Over to you, Katie.
Awesome. Thank you, Dan, and thank you everybody for joining today. Clearly, these are very unprecedented times. I'm happy to have the opportunity to speak with you today. As Dan said, I lead the commercial banking group for TD for Vancouver Island. We have offices in Nanaimo that service basically Duncan North, and we have an office in Victoria as well. I am based in Victoria, so that's where I'm speaking to you from today. Obviously in my home, we've been all work from home for the last 2 weeks at least, and who knows how long it will continue, but we will carry on in these crazy times. So I appreciate VIEA giving me the opportunity to speak a little bit today about how you can approach your lender, specifically businesses, to discuss the options that are available to you during this time. I won't have all the answers today. There are still a ton of negotiations ongoing with governments and all of the financial institutions, but we certainly, and new information is coming out daily. And so we are trying to keep people updated as quickly as we can. I would encourage everybody to visit the websites often of your financial institutions as they are posting information on there regularly whenever there are updates to share. So as I said, I won't have all the answers to every question today, but I'll certainly do my best to pass along the information that I've got. So what I wanted to really speak to you today about was, if you are finding yourself in a situation where obviously strapped for cash, if you are operating a business that isn't open right now, or certainly seeing the amount of volume that you are typically used to, what are your options? And so first and foremost, I think if you haven't already, it's important to reach out to your financial institution to ask what kind of support they are offering to their clients. Most of the financial institutions are, I would say, if not all of them, are very supportive during this time. Anything that we can do to help clients through this difficult period and help them preserve cash is going to be important. I would say everything is done pretty much on a case-by-case basis. Unfortunately, there isn't a kind of a one-size-fits-all solution. But that said, there are a lot of similar options out there that the banks are offering. Most common right now would be a principal payment deferral. So most FIs, financial institutions, are offering clients to defer principal payment for up to 6 months. That is something that seems to be a pretty easy request for most people. There's not a lot of additional information that's needed in order to request for that. And so what that does is you can request up to 6 months. You would still be required to pay interest during that period, but the principal portion of your loan payment would be deferred. Financial institutions may consider to pause both interest and principal payments. However, if that is a request that you have, that would be a bit of a different ask and might require some additional information and take slightly longer. But certainly I know that some financial institutions are offering both a pause on principal and interest. Another option that people have to them, just going directly to the banks immediately, would be to ask for operating line increases or bulges for a period of up to about 6 months again. This will again require a little bit more due diligence from the bank just to ensure that the additional advances would either be supported by accounts receivable, inventory, or any outside security. When you're requesting an increase like that, it may require the pledging of additional assets to secure or a personal guarantee if that isn't in fact already on hand. If you do go to a financial institution and you do decide to defer a principal payment, a couple of things that you should probably be aware of. It's very likely the amortization on the loan will not be amended, meaning the amortization will remain the same. So what will happen is the principal payment would be deferred for a period of up to 6 months. And then once the payments are reinstated, it is likely that the payments will be slightly higher for the duration of the loan. Alternatively, there may be the FI on a case-by-case basis may be open to keeping payments the same with then a bullet payment due at the end. So a larger lump sum due at the end of the term. People should know that, at this point in time, the banks are certainly not interested in gouging or charging fees. This is all being done, obviously, to help clients through these very difficult times. And so when you're approaching your lenders, there shouldn't be any additional expenses for payment deferrals or bulges at this time. If you are requiring a significant restructure, so if the business was potentially, not doing well before COVID and is now really not doing well, there may be a bit more involved. But, again, if there are fees, those should be discussed and negotiated up front so that there are no surprises. If you do decide to defer your principal payment, you will be potentially paying a higher interest expense over the duration of the loan, given that 6 month or however long the period of principal deferral was, because there was no reduction in the principal payment. Your interest would be a little bit higher through the period, but that being said, it does certainly help to preserve cash, which is really important during these times when cash flow is definitely going to be impacted. So a couple of things that I just wanted to make people aware of too, that the bank will likely be asking people for. you know, one of the key conversations that they're going to want to have is, you know, what are you, the borrower, what are you doing during this time to essentially help reduce expenses and offset some of the costs that you would normally have. So these can be either through a reduction in wages if you've obviously had to lay people off, reduction in management fees if you're drawing management fees out for yourself, obviously reductions in purchasing or inventory, rent reductions if those are available to you, but just something to show that the business is making reasonable adjustments in these unprecedented times. Projections are clearly very difficult for anybody at this point in time. Normally the bank would be asking for projections, but I think it's just too difficult for people to know what's going to happen in, you know, a week from now, never mind 3 to 6 months from now. And quite frankly, even if projections were provided, I think it would be very difficult for bankers to confirm if those were accurate or try to do any kind of sensitization to them. So they likely won't be asking for detailed outlooks, but any information you can provide with respect to, you know, if you've got payments that are coming due that you know of, or if you have contracted revenues coming in or contracted expenses going out, those kinds of things will be very helpful. I would say be prepared to provide your most up-to-date financial statements or financial position, so internal or management prepared. With respect to asking for rent and or lease relief, we've been getting this question a lot. Unfortunately, there isn't a ton of, not a lot of examples I have so far of real successful negotiations. There have been some instances where we have seen our clients able to negotiate some deductions or reduced base rent costs. And so we are seeing some of that across the board. Obviously, with the banks foregoing or deferring principal payments for property owners, the expectation was that those savings would trickle down into tenants by way of rent relief. I would say that hasn't certainly not been consistently applied. It's ultimately up to the property owner to pass those along or not pass those along. But again, we have seen some instances where tenants are able to successfully negotiate a reduction in the base rent. Unfortunately, I have not seen anything to date where there have been reductions in any of the additional rent expenses that businesses may have by way of, you know, taxes, maintenance, insurance, and those kinds of things, as many of those costs will still continue. But I would encourage you to have conversations with landlords to see if there is an opportunity to defer or reduce the rent, at least for a period of time. And then just very quickly, just wanted to go over a couple of the other options available. So the options that I've talked about so far, principal deferral, operating lines, potentially principal and interest deferral, are all available through your bank. Just go to your banker and have that conversation. There are some additional support programs, obviously, that the government has posted out that I did just want to quickly go through. I know there's been a lot of conversation around them. So the Canadian Emergency Business Account, which are the interest-free loans to businesses, those applications will be accepted online by all major financial institutions within the next few days. It was supposed to be, we were under the impression it would have been launched yesterday, but there have been some delays in that program. So again, stay tuned to the websites of the banks for additional information. That is available for any existing bank client for any FI who had an active business account as of the date of March the 1st. As most people know, it's up to $40,000 available, which will help to pay for any operating costs that actually cannot be deferred during this time. It's at a 0% interest rate until December 31st of 2022, so just over 18 months. So no minimum monthly principal payments are due. It's essentially a revolving line of credit that will be made available. There is loan forgiveness on that loan for up to $10,000 if balances are fully repaid on or before December 31st, 2022. If not repaid in full, then they can be converted into a 3-year term loan with full repayment until December 31st, 2025. So they can be converted into a term loan after if it cannot be repaid by the 2022 date. There are other various programs available through the banks, through Export Development Canada. Business Development Canada are working with the banks to provide government guaranteed programs as well. I think my advice there would be, again, to approach your banker, have conversations about what products or programs might be the best fit for you, and they will definitely connect you and put you in touch with the appropriate people at either business development or expert development. And we are working on co-lending situations as well. So as I said, lots of things on the go. I think the government's tried to be very responsive. A lot of these programs are very new and we're rolling them out. So a few hiccups and bumps along the way, but you know, certainly there are a lot of options out there, and we just want people to be aware of the options and what they should be asking for. So with that, I think I'm done, and I will open it up to take questions if anybody has any. Happy to answer what I can.
Well, thank you so much, Katie. That was very, very comprehensive in 10 minutes. So
I gave you a lot of information.
Yes, exactly. That was very well done. I guess I'll start just with a question in terms of like really small businesses. So like a 1 or 2 person business versus a larger business of say 10 or 20. Is there something that is there a different approach for micro business going to their bank and following your advice versus a slightly larger one?
Not really. I would say for micro business, obviously you're probably dealing at a retail branch as opposed to in a commercial banking center, but you know, still go in, talk to your banker, have the conversations. The programs are available to micro business as well. So the $40,000, there is no limit on that one. It's available to any business, as well as principal deferrals, operating line increases. All of those options are available to any size business. There might be, I think some of the smaller micro ones might be able to do more things online than some of the larger businesses can. We're trying to make the process to apply for these things as streamlined as possible. And so I know a lot of the FIs have tried to do things a lot through online so that the turnaround is quite a bit quicker.
Okay. We have a question here. Even an interest-free loan is still increasing my debt. How do I decide if this is a solution for me?
I know it's a really difficult situation. I think, you know, in having those conversations with people, we've had a lot of people who are obviously interested in the 40,000 interest-free loan, but that's exactly the challenge. Is it does increase your debt. Now you do have, you know, up to 18 months or so to figure out if that's something that you would be able to pay back. I mean, it's 0%. There's certainly something to that. It's certainly better than nothing, but I do think you need to be cognizant that debt is debt. And, you know, it's not always a good thing to take on. But if, for example, you have expenses that cannot be deferred during this time, and it's the difference of you making your rent or not making your rent, or paying your taxes or not paying your taxes, you know, it might be a good option. Yes, it increases your debt, but I think the opportunity for it to be termed out over the longer term is also helpful as well. So there's no immediate need to pay it back. It can be termed out over the longer term. You don't have to take the full 40,000. It's a revolving line of credit. So whatever is outstanding at the end of the 2022 period would then be termed out. So you know, you might be able to pay a portion of it down and then have the balance of it over a longer term.
So can you restate the criteria that a business has to meet to qualify for the interest-free loan?
Yeah, so you have to have had been had a business account at a financial institution as of March the 1st of 2020. And that is pretty much it. Most of the applications will be available online. That will be something that will be available online for people. So all of the FIs will have something up and running where you can go to their websites and you'll be able to apply for that automatically online.
Okay, so just to clarify, that would be for both banks and credit unions?
Correct, correct.
Okay, got it. All right, well, we encourage more questions. You probably did such a wonderful job, Katie. That
I doubt
got
it.
all the information they need.
Or I gave them so much their heads are spinning. And I mean,
Right.
it's tough. Like I said, we don't certainly have all of the answers right now. You know, lots of things are still changing. We're getting updates daily. I actually have a call at 12:30 today to talk a little bit about the programs that are coming available, because we're learning new things every day, and there's more clarity that's coming out of these programs.
Okay. Yeah, here's a comment here. So there's the $40,000 loan does not apply to boutique or mom and pop businesses. They need to have at least $50,000 to $500,000 payroll. A lot of these businesses are business owner operators and maybe have one staff. The payroll doesn't reach 50,000. Also, I know an operator who went to a bank for a $20,000 loan. We're told they had to be open to get a loan. No traffic, no cash flow. So do you want to respond to that comment?
Yeah, that's interesting. So, you know, the fact that they would have to be open to get a loan is interesting. I think the approach that we've taken is, you know, if you were previously a solid operator prior to COVID, even though, you know, traffic and cash flow was obviously down, if you were a solid operator prior to COVID, it would be expected that you would be a solid operator after COVID. So once your store reopens. You know, it's funny because, sorry. So I would say that's interesting. I'd try another FI. I'd try somebody else. I mean, I think the challenge is obviously moving when you're, now is not a good time to be moving institutions. You want to be staying with an institution that knows your history and understands kind of has a solid relationship with you. But I would be surprised if they would say, you know, sorry, if you're not operating, we can't give you additional funds. That's unfortunate. Yeah, and sorry about the $50,000 payroll. I think you are absolutely right, and I'm sorry that I forgot to mention that. I think for some reason I was thinking in my head that that was with respect to the wage subsidy program, and not the $40,000 account program. So
okay, that's an important clarification.
yeah. Yeah.
When will you can speak on behalf of TD? When will the application forms for the interest-free loan be available?
Yeah, so I'm hoping to find out more about that today on my call at 12:30. I know that CIBC came out with an announcement that it would be up and running by April 6th, which was yesterday, and then over the weekend had to back that out as there's been a delay in the launch of that program. We are literally expecting it any day. I would hope that it would be out before the end of this week. As I know, you know, the longer we wait, the more difficult it becomes for many businesses who are just waiting for cash.
Okay. So just to clarify, a couple of questions here regarding the upper limit. So the upper limit, an annual payroll of $500,000?
Yes, and again, I'd like to take that offline maybe and circle back, because again, for some reason, I'm really thinking that those rules apply to the Canadian Emergency Wage Subsidy. But I need to confirm. So I'm sorry, I don't have that off the top of my head here right now. But I would like to take that back. So yeah, there is something about a minimum of $50,000 in wages and a maximum of 500, but I feel like that might be for the wage subsidy program, but I'll confirm.
Yeah, that sounds about right. And there was a question here about when we were referring to payroll, is it just employees, or can that also include contractors?
Yeah, and when I'm talking about, for the wage subsidy program, I believe it's only employees, not contractors. If we're talking, on the other hand, about going to your lender and demonstrating how you've reduced payroll, that would include contractors as well. So any kind of payroll would be expense related. So if you're going to your lender to say, here's how I'm reducing expenses, I've laid off employees and reduced contractor work, then that certainly accounts. On the contractor side, I don't believe that they are eligible. I don't believe contractors fall into the wage subsidy program. I participated actually on a call with KPMG yesterday talking specifically about the wage subsidy program. And if I'm not mistaken, contractors were not eligible.
Yeah, okay. I think another comment here related to that, just around the challenge of the wage subsidy program isn't helping the smaller businesses, even if they've been around a long time. So the owner-operated, which are many of them here on the island, they're getting a sense that the wage subsidy is not addressing them. So I guess the only other option they have is to look at the CRB, which has just launched this week. But is there any other solution there?
Yeah, I think you're probably right. There is the smaller groups are falling into a bit of a bucket where there aren't specific programs. If you do have, for example, wages under 50,000, which most people will, or most small businesses will, I think the emergency benefit relief program is really the only other option.
Okay. Does the 50,000 allow for an owner to draw a salary?
I believe it does include owner salary, but that should be confirmed probably on a government website, but I believe it does.
Yeah. Okay. Someone here mentioned about that there is actually a payroll limit of $1 million per year. So we may want to just reconfirm that. Okay. Based on what we hear. So we can get some of that information out.
Yes.
Following our conversation here. So, yep. So I think we'll wrap it at this point. Unless there's any more, if there's any more questions, please address those to our president, George Hansen, George at VIEA.ca, and we will try to push that out, put it on our website. Again, this stuff is moving so quickly, and trying to get clarification and so forth. So, Katie, any final words before we go?
No, again, thank you all for joining. I think, take this opportunity to talk to your lenders, talk to your accountants, talk to your professional networks. They are keeping up to date on as many things as possible that are going on, and, take every opportunity you can to at least explore the options that are out there. We are advising our clients sometimes about not necessarily immediately jumping into the $40,000 loan or a deferral if it's not necessary. Kind of hold your powder dry and keep it until you really need it. So if you need it now, you need it, and do it. Cash is preservation of cash is crucial right now.
Well, great words to end on. So thank you so much, Katie. Really appreciate your insight here, and I'm sure we may be coming back to you again in the weeks ahead.
Yeah, hopefully I'll have more to share.
Okay.
Okay.
Thank you very much. Thank you very much, everyone. We really appreciate you joining us today. Please make sure you keep following our e-news updates. If you don't have that, please do so through our webpage, VIEA.ca, and share that with others. If you have an idea for a session or specific topics you would like us to consider addressing during this video series, please send them our way. Our hope is to continue this dialogue and keep connected through the coming weeks. So we do have another session planned for this week on Thursday, April the 9th at 11:30. We have Carrie Eldrick, who will be speaking to us about how we can pivot our businesses and our activities to address the current situation that we're dealing with. And she's part of a group called Project Rescuers. So that'll be an interesting topic, a little different than our more recent sessions. So please join us this Thursday at 11:30. And this session has been recorded, so it will be posted later today on our webpage. So please keep an eye on that. Keep an eye on our social media networks as well, whether it's through LinkedIn, whether it's through Facebook and Twitter. We're pushing that information out all the time. So once again, thanks very much. Let's continue to keep good company in the days and weeks ahead. Thank you very much for joining us today. Have a wonderful day.